Let me bring you on a property tour. Today I have two to show you. The first, imagine living in this lush greenery facing Greater Southern Waterfront, one of Singapore's most iconic architecture. Seafront living, away from the noise of neighborhoods, and if you love Vivo City like me, it's even walking distance. The second one, another brilliant architecture, a 12-meter specially designed waterfall that is quiet, located at the heart of business district. Expat tenants should be easy to find. Will also be near Marina Bay Sands, and there are so many MRT lines to connect you all over Singapore. Love them? So I tell you, these two projects have many unprofitable transactions, and if you're curious to find a bit deeper on what are learning points, continue watching on. Hi guys, welcome back. Without further ado, let me show you the name of the first project, Reflections at Keppel Bay. I've actually circled out 3 owners who have made more than $1 million of losses. When did they start their investment? 2017, which is quite possibly the launch, which means they've held it for almost 16 years. Property will definitely make money if you hold long term, maybe not so. The per square foot for Reflections at Keppel Bay has recovered a little bit over the last few years, which is in line with the overall bull trend we are seeing in the property markets. But again, this is a far cry from what it was priced 15 years ago. So you can imagine back in 2007 when these owners made their purchase, it was like 2,500 per square foot, a super high number, but you're getting a super premium. They imagined that this property would double and triple, but what indeed happened is that the per square foot just continued to trend down for the next 15 years and only recovering slightly. Instead, they'll be seeing other projects, all of them making way more profits than they did. So the question is, why? The name of the second project is Marina One Residences. Take a look also, you would find many unprofitable transactions. Some of the owners bought in 2014, some of them bought in 2018. One was when it was bearish and one when property markets have already started to pick up, if we see the general market trend. But all in all, these owners have all suffered losses. So how do we really explain this? Now I have a suggestion to propose. Again, it's a suggestion because there's no concrete answer. There are always exceptions to general findings. But what struck me the first is these properties probably appeal more to expats than Singaporeans. Take a look again. One is away from the neighborhoods in lush greenery and waterfront living. The other is in CBD where there are no major shopping malls. So how many of us would really like to stay in CBD where it's dead on Sundays? Or do you prefer Jurong Point, for example? Or do you imagine yourself staying at a place where it's quite far from your own primary school? Let's say in Ang Mo Kio, or you really prefer to be in Tanjong Pagar? And if you have small kids, do you have parents that stay nearer Marine Parade or Marina Bay Sands? I think there's data to suggest that Singaporeans are not looking at these properties first, because if we see for Reflections at Keppel Bay, only half is owned by Singaporeans, and the buyer profile is almost entirely from people who are staying in private residences. Then what about for Marina One Residences? You would see even less ownership by Singaporeans, and more than 30% are owned by foreigners. Again, the buyer profile by purchaser address has very little from HDB flats. So the question is, where are all the foreigners who like these properties? Again, it's a supply and demand, and as we have all learned, demand when it's weak, naturally the price will trend downwards. Not just that, at every juncture of ABSD increment, the obvious target has always been on foreigners. Right now, the foreigner ABSD has been raised to 60%. Yes, there are foreigners that are willing to pay 60%, like what we see from this article. Indonesian billionaire just forked out 60%. But again, Indonesian billionaire is not looking at these properties. He's looking for a luxury condo to store wealth. Could this finding really explain why Park Esta at Eunos has done much better than these two properties? Because there's strong support from Singaporeans and HDB upgraders. If you see, there are many profitable transactions, the rate of return has been good, and of course some can be attributed to this current bull trend. But what we can see from the buyer profile is that Singaporeans and PR make up 96% of buyers, and more than half of the buyers are actually from HDB addresses, which suggests that many of them are actually upgrading from their current HDB flats. In my opinion, the ABSD rule on foreigners is not likely going to change anytime soon. It is popular from the political standpoint anyway. Penalize the foreigners, there's very little incentive to make a reversal on that direction. Could this really explain as to why the last 5-10 years, Core Central region has underperformed OCR and RCR that much Not just that, Core Central region enjoys the least support from buyers with HDB addresses. Core Central region again is Newton, Orchard, Sentosa, where generally most Singaporeans only go to shop and spend time but don't really stay at. So if we are on the right track, I think the demand for property has been mainly Singaporean driven, and what Singaporeans generally want is firstly a mall that is not dead on Sunday. They can go and spend time with their families and kids, have dinner with parents. And 2, they want to be near good primary schools. And 3, if possible, to be near parents. I'm a young parent myself. I super appreciate my parents being nearby so that I can get help. So all in all, HDB upgraders, those that are selling their BTOs and ECs will make a capital gain, is likely the biggest market and the most sustainable market to drive prices continuously upwards. And quite possibly it's true, because if we were to guess from property advertisements running, which you may be seeing from this sharing itself, those are hints as to where buyers are coming from. And as long as government keeps increasing housing grant, I do believe that HDB flats will always have a tailwind, and that will naturally translate to mass market condos or condos suitable for families to be in higher demand. And coming to here, if you agree, smash on the like button. And if you appreciate the sharing and want to support the channel, do check out the super stickers over here. I don't have any property inventory to sell you. I only have super stickers to see if there's a fair value for the sharing provided. And as always, do check them out, and thank you very much. So all in all, I think it helps to buy projects that have higher Singaporean buyer ratio, that have higher HDB upgrader ratio, but also let me share with you an exception just in case you think it's a magical formula. At the same time, I also like to address this. Buying freehold is confirm paucha, 100% will make money. Not necessarily true. This project is near River Valley Primary School. It has high Singaporean purchase and some HDB upgraders. It is also freehold. It was launched unfortunately at a peak cycle in 2013. But why I would like to bring this case study up, as what you've seen in the thumbnail, is that 11 years into this journey owning a freehold property, someone who has bought at 1.6 million has actually sold it off at 1.5 million, resulting in a $106,000 loss. Curiously, this unit is also on the top floor, which suggests everything to be good, but still the property value trended downwards. So why losses? Could it be purchased at a launch where prices are super high? It could be also, and luckily, prices have actually rebounded a bit. If not, the losses could have been bigger. From what it seems, there could be some layout issues with this project, and this project is actually very focused on shoebox units. This is where there's more investor appeal than homestay appeal. More than 80% of units are less than 600 square feet, and as we can guess, such a layout with the size already so small and having aircon latch and a balcony that's so small and a master room there is not likely going to appeal to many families. Freehold or not, it didn't really matter, so this is a key learning point to remember. Let's add up what we've discussed so far. Number 1, buy condos which are homes best for HDB upgraders. That is quite possibly still the safest future demand. Number 2, don't buy properties from a launch at peak market cycle. Nobody knows when peak actually is, but if you overpay, I think the chances of doing well is not too good. That is why I'm still skeptical for buyers who bought into Blossoms by the Park at 2002 or 2003 per square foot. Even though 96% are Singaporeans and PRs, I'm not too sure if this is still a good buy. Number 3, buying freehold doesn't necessarily mean gains. I think evidence suggests that demand from families is more important than being freehold. So again, if you have heard something useful, smash the like button and smash on the subscribe button. Because I haven't addressed this from episode 1 yet. Why did Sky Habitat owners not do too well since their launch in 2012? And is it across all owners who have bought private properties in Bishan area? I have surprising findings to do a third episode. So do smash on subscribe so you get notified when it's released. And thank you again for watching right to the very end. As always, I have some previous tutorials to suggest for you that might be useful in your investment journey. With that, I'll sign off from here and see you in either of these. Take care as always. Goodbye.